Welcome out to the Trading Justice podcast presented by Tackle Trading, and we got a good, fun podcast in front of us here today as we're going to be talking about the central bank as Jay Powell decides to continue his prolonged pause. We're going to discuss and debate based on Jay Powell's quotes from the press conference itself. Mark has a list of the top five that's going to be prepared to discuss all things central bank this week. We're also going to get into stock it or drop it, talk about a few stocks that were in the news this week. Do we stock it or do we drop it? We'll have that discussion here in just a moment. And then we're going to finish up with a good round of Coach's Corner. But before we get into the discussion here today, too deep, we do have an awesome webinar coming up on Monday in our virtual conference season at Tackle Trading. And it's been so fun so far, Mark. We've done covered calls last week. We did Master Trader the week before. We did the 7-step guide to trading the week before that. And now we're in that zone where we got the next two sessions coming up. And it's all about directional trading, day trading on Monday, swing trading the week after that. And then it's just a simple, awesome AMA with all the coaches of Tackle Trading to finish up our virtual conference season. So if you haven't had a chance to jump over to Tackle Trading's live events page, you can watch the replays, but definitely register for that day trading and swing trading webinars coming up. Going to be a tremendous amount of fun. Going to cover a tremendous amount of ground as well. And so looking forward to another amazing webinar this coming Monday. If you haven't registered as of yet, you can hit the link in the description below. And with that said, how are you doing today, Chucky?
Dude, I'm doing great. I got to talk to the Fed with you, in which I thought was a very interesting Fed meeting. I thought it was worthy of an extended discussion. It's going to get lost in a lot of the noise. We got a lot of headlines going on
right now
with the war. Will the United States get involved or not? We'll talk about that a little bit when we get to oil. But I thought this was a really interesting Fed meeting. In fact, man, I put into Chat GPT. I was like, all right, I want you to give me, because you know how, our AI friends will sometimes talk more than they should and explaining
far
things.
more than they should.
And I was like, listen, I don't want to give
feel
you any.
like when I talk to my Chat GPT, it's kind of like sometimes people talking to me. They give a lot of information.
And I was like, I want you to analyze everything Powell said, and I want you to analyze everything that you saw from the SEP, and I want you to give me in one sentence, what was it? Was it more dovish, more hawkish, about the same? And their answer was the Fed has turned more hawkish, prioritizing inflation over growth. That was their one-word answer. And I was like, that's about what I saw as well. And we're going to discuss. What do you think about AI's one-sentence description there? Just gut reaction to it.
I didn't take it as hawkish personally. I understand why if you feed all the data points from that one meeting into Chat GPT and they're breaking down that one meeting based on the conversation, why somebody would take it slightly more hawkish. But if you're going to take it slightly more hawkish, please tell me when the Fed's going to debate any degree of a rate hike. Is that in the conversation at all?
No, there's no rate hike.
Wait, is that in the 5 quotes that you have?
No, but there's one where you could infer. We'll get to that.
I truly don't understand the equilibrium argument when the entire discussion is when they're going to cut next.
No, and so I mean that's a sensible approach to it, right? But they certainly weren't dovish. Would you agree with that?
No, they're trying to be net neutral. And that's why when you say, okay, I'm going to take it slightly hawkish or I'm going to take it slightly dovish, I'm not going to argue with you because it's all based on interpretation. They're trying to be net neutral, but the reality is the interest rate itself is not net neutral. And that's an important part of the discussion. If the interest rate itself was net neutral and they were net neutral, that would make some sense to me. But they're trying to paint this environment as net neutrality when their interest rate is not net neutrality.
Yeah, no, and we're going to get, I know you have some hot takes. I have some thoughts as well. We're going to get into them. But I wanted to frame this Fed discussion with Powell's own words.
Mm-hmm.
Right now, Powell is obviously, the chairperson of the central bank. Powell has given many speeches over the years. He's given many speeches over the last several months. And Matt, those speeches over the last couple months have been about the same speech, right? There has been, basically times on our side. We're well positioned to adjust. And, with different things going on with recent inflationary readings, with pressure from the White House, with the war, there was some speculation that maybe you would see a more dovish tilt. I saw that out of several analysts. That isn't what occurred, and you knew it wasn't going to occur. And I want to start that with the first quote when he says, "We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments." When he gives that quote early on, you're not going to get anything radical, right?
No, but I don't think anybody was expecting anything radical from the central bank this week. There was absolutely no expectation that the Fed was going to cut. There was no expectation the Fed was going to hike. Everything was based on is the Fed going to change the stance on policy, where they have been painting both of the mandate from a labor perspective and an inflationary perspective as neutral. And so when he comes out with his first talking point of, hey, we feel like Fed policy is in a good position, well-structured position to be able to maneuver on anything. I mean, that makes sense when you just hear that in and of itself, right? Hey, we feel like the interest rate is in a good position that we can respond to any economic challenge coming at us. If inflation is from tariffs, and that's basically what Powell's anchoring on the inflationary side right now, if inflation from the tariff situation is going to be worse than anticipated, well, we feel like the interest rate's in a good position to respond to that. And if we feel like the economy starts to crater and we start to see negative economic data and it starts to have a oversized impact on the market, we feel like we're in a good position to respond to that environment at that point. Okay, I don't have any disagreement with the quote. I will say this, that you could give that quote if the interest rate is at 5.25%, 4.25%, or in net neutrality at 3.25%. And so that quote you can give at any point. At any point. I'm willing to bet that the central bank led by Jay Powell at any point in the last 5 years could have said that exact same
that we're
quote.
well positioned to handle whatever.
And if you want to go back in time, before we went through the inflationary saga of 22 and 23, well, what was Jay Powell saying? Well, we feel like we're in a good position to respond to anything that comes at us. We feel like we're in, at any point, is the central bank not going to say that? Like, truly.
Yeah, but it feels like it's been the rallying cry central talking point in recent months, Matt. Is this a Fed?
This is a prolonged pause for 2 years.
Matt, is this a Fed that's afraid to act? And they're hiding behind this, that they don't want to make a call?
I believe the Fed has fear to act because they were so historically wrong the last time they acted. Remember, the Fed hasn't done a thing since they started lifting interest rates 3.5 years ago. They really haven't done a thing outside of one short-term cutting cycle in 24 when they started the cutting cycle in the first place, the same way a lot of other central banks
which
did.
Some cynics would say was the election cycle cut.
Well, some cynics would say that, yes. But if you look at kind of the Fed acting, like when the Fed acts, when they change policy and they start doing something, the last time they did make a major call, they made a major flaw. They made a major mistake. They were late on the transitory conversation. They were historically late on the transitory conversation. And yes, I do think that impacts Powell's decision making. And I do think that has been part of the reason why we were going to go into a prolonged pause. Mark, if you go back a year ago, 2 years ago, I was saying Powell's going to go into a prolonged pause. There's going to be a prolonged pause here. Well, after years of being in that prolonged pause, I wonder at this point, and I've said this pretty much for the last 2 months, at what point is Powell going to actually have an opinion on this situation? At what point is Powell actually going to have an opinion on, is inflation going to get worse, or is the economy going to get worse? And if you go back and look at just the projections out of the central bank this week, they had a slight bump up in inflationary expectations, but there's still confidence that they get down to their 2% target over time.
Yep.
And on the GDP side of the equation, they contracted their forecast on GDP down to 1.4%. And so they are seeing weakness in the economy. Their own projections show weakness in the economy. And so their projections are starting to form an opinion, but Powell still isn't forming an opinion. And so even in the speeches, when you listen to like Waller, for example, Waller's saying, listen, we got to cut. We got to cut. So
let me
interject. I'm just saying other people at the central bank are looking at this data and they're forming an opinion.
And that's
hold on. One last point.
Okay.
Other central banks around the world, we live in an interconnected economic system. We live in a global economic system. And when you look at other central banks around the world, Europe, Mark, they haven't cut once. They haven't cut twice. They've cut 8 times.
Well, and central banks England, in Finland, Sweden, cutting, they cut this
Swiss,
week.
You're right. All over the northern European states, they're cutting. Okay. Canada has started a cutting cycle. New Zealand's kind of holding a little bit firm. Australia is starting to turn to a cutting cycle. The only central banks out there right this very second that are not embracing a cutting cycle in front of what they see as clear economic damage is Japan, which is not cutting for specific, unique reasons to Japan, and the United States, which is not Japan. Well, at least not yet. Not yet. We might be trying to get there, but not yet. And so I just feel like at this point, yes, to answer the question, yes, I do think Powell is scared to act. Mark, other editions of the central bank, they acted all the time. If Volcker, for example, 40 years ago saw a bump up in inflation, he would be very quick to act. And if he saw that the environment was getting better, he'd be very quick to act. Our central bank has acted one time in 2 years, and they have said the exact same thing over that 2 years. So at what point does Powell actually have the ability to form that opinion? Because to me, the economy is clearly showing some turnover here. You're seeing weakness in housing. You're seeing weakness on consumers. You're seeing weakness on retail on the retail side of the equation. And if we do see that bump up in inflation, that clear sign of ongoing weakness is just going to get more and more and more. Mark, you have inventory in housing building, hour by hour, day after day, week after week. Inventory in housing is building because you have a bunch of people trying to sell, and buyers can't get in there because the cost is too high. And so the further you delay this, the more impact you're going to have. And so, yes, my argument has been, if you are going to have a net neutral statement, which would you agree that the net neutral statement out of the Powell trying to paint both sides of equilibrium is exactly what he's been trying to do for the last 2 years?
Yeah, but I'm going to have some quotes here. I don't think it was an equilibrium in his press conference and his statement this week. I think it was very tilted towards the inflationary worries over the job worries, and I'll get to those quotes to share with.
Very quickly, though, that's Powell's press conference. What about the statement? What about policy? What about policy in general?
Growth down, inflation up, and projections.
Okay. And yet, if we're going to have a neutral interest rate, it's my opinion that the actual interest rate should be neutral, which is 3.5%.
Yeah, no, and and the second quote I have, and this is going to tie into a theme in the next few quotes, is that when he referenced the economy, Powell, I'm going to tie a couple quotes in here for the same thing. He would talk about, the economy is in a solid position, right? Despite elevated uncertainty, the economy is in a solid position. We've heard that. And then he referred to the labor market. And whenever you refer to the labor market, he's like, as long as we're seeing the kind of labor market that we have, right, we're comfortable waiting to learn more, right? Painting the labor market as solid. You reference Waller. Well, Waller on CNBC, and this is not the first time, did not paint that same picture about the labor market, right? When Powell did, he was like, labor market's solid. But, Waller used the type of language, why do we have to wait until we actually see a crash before we start cutting rates? I mean, that is as explicit as you can get out of a Fed official saying, I'm seeing weakness that gets me to say that we should start cutting right now. So Powell though
Well,
wanted to.
historically, the central bank is the entity that tries to get in front of things and doesn't wait on actual economic situations to impact real people. They're supposed to be in front of things. Waller is speaking Fed book there.
Yeah, but Powell didn't want to speak that book. He wanted to paint it as a solid labor market, right? Like, I mean, so
listen, I don't want to paint the labor market as weak. It's a 4.2% labor market, and we haven't seen real big signs of weakness, but there are signs that are starting to show cracks in the strength of the labor market. And if you look at the trend on initial claims, for example, just the trend on initial claims, what's happened all year long, outside of a couple months, okay, a couple months where we saw some radicalism, but look at the trend.
We've started to get
time.
To some elevated readings.
Now, are we, like, for example, with initial claims at 245,000 initial claims, is that a number that we should be, fearful of?
No.
In general, probably not, right? Probably not. Typically, initial claims is in the 200 to 220,000 range. That is typically where you want it to be. 240, 250, it starts getting elevated. It starts getting concerned. If you recall, Mark, last year when we got into this level at 240, 245, 250, there was a lot of economists out there starting to bring up the Psalm roll, and there was a lot of economists starting to worry about the impact on the labor side of the equation. So I don't want to say labor is weak, because I don't believe the labor market to be weak. But, and maybe it's the AI influence on me, but we are seeing weakness start to occur in initial claims. We are starting to see a little bit of weakness in the actual labor numbers themselves as well. Whereas this was just a strength upon a strength for years, we are starting to see weakness. And we're going to go into an environment where AI is starting to take jobs. Already, AI is starting to take jobs, and that is going to enhance in the future. And so, yes, I do think that in general, labor is strong. I wouldn't paint a 4.2% labor market environment with 245 initial claims as a weak environment. But I agree with Waller that you are starting to see the signs of weakness. And that's where my argument has started to really kind of go in the last couple weeks here in the podcast, is we should start to, quite frankly, compete with Europe and England and Canada and New Zealand and these other central banks who are starting to lower interest rates. The ultimate question is, I think the Fed can see this data. Waller knows where this data is going. Jay Powell knows where this data is going. So why aren't they embracing the cut? Are they so fearful
Waller is
of that short-term bump? And they have even said it's a short-term bump in inflation, Mark. You go pull every central banker that has voting rights at the bank this year. I don't think there's one of them that expect a prolonged long-term impact on inflation due to tariffs. It's all about the short-term impact on tariffs. Well, in the short term, we're also starting to see weakness in the economy that will offset some of that. And let's not act like that tariff conversation doesn't change quite a bit. We don't know what that environment's going to be in 3 months. And maybe that's, having a little bit of hesitation with Powell. But at the end of the day, to answer the specific question, yes, I do think Powell is scared to act. And I think he's scared to act for one specific reason. He was so historically wrong on the transitory inflation that he doesn't want to be historically wrong a second time on inflation. The inflation data is different. I can't say that clear enough. When you're talking about the inflationary expectation coming out of the pandemic, when we were raining helicopter checks over an 18-month period, that's going to have a different inflationary impact due to the velocity of money than what we're seeing today. It was obvious at that time we were going to see big time bumps up in inflation because velocity was increasing. Mark, velocity is not increasing right now. It's not. Regardless of the tariff conversation, velocity is not increasing because of the economic weakness that we are starting to see. And
No,
so, yes, I do think Powell is nervous to act because he was historically wrong last time.
and this was, and I had this quote at the end, but I'm going to bring it forward as one of the quotes. And when he said, "We are open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings." And I remember in watching him talk about this, basically he was saying, we screwed up in the pandemic in how we approached inflation, right? We were behind the curve.
They were.
And he was acknowledging that and
Mhm.
says we need, and he took extra care in his words, and his tone changed here, and it's like we need to learn from those lessons, basically saying that that was on his mind. Now, Matt, there's very few things the market likes less than a Fed that they believe is behind the curve. Now, that's not the case we find ourselves today. But remember when we had that little growth rule, and you referenced the SOM, right, where every financial media expert became an expert on the SOM rule, overnight. But there was a
Everybody's a
real
labor market
negative
expert.
market reaction, when the market sensed, is the Fed behind the curve here on the economic growth? Turned out to be a
what
growth
did I say
scare.
then? But what did I say then?
I don't remember exactly, but it was something along the lines of
This
markets
is
got it
stupid.
wrong.
This
Right.
is dumb.
Markets got it
This
wrong.
isn't
This is an
happening right now. They're
overreaction.
putting money into the system. They're expanding the M2 rate. They're
But that is not
misreading
your
the
thoughts
environment.
right
There was a
now.
seasonality impact to it. It's a different environment, a different treasury market, a different fiscal government. It was a different environment, and it's just we're seeing a different impact right now.
Yeah, and
And
Matt,
we're also much further into the AI infrastructure development today than we were a year ago as well. And so, yeah, last time we went through this exact same saga, I had a different opinion. I had a different read on the environment, and quite frankly, my read was right last time. And I don't think I'm wrong now. I didn't think I was wrong in 21 and 22 for criticizing the central bank for being late on interest rate hikes. I don't think I was wrong when I criticized the central bank for stopping hiking. I would have hiked faster and more aggressive initially. I don't think I was wrong a year ago when I said it was absolutely ridiculous for people to be mentioning the SOM rule and now acting like the labor market is just cratering out there. And I don't think I'm wrong today on criticizing the Powell on being late. And so I just, to me, it all comes back to that inflationary situation of transitory, and it has impacted Powell's decision making ever since.
Yeah, no, when I hear your voice, I listen to everything that Waller says. I listen to a lot of what not everything, but my goodness, I talk to you more than any other human being there is. I hear a different tone in your voice in analyzing the economic data. And I heard language out of Waller this morning that I hadn't heard. It was not panic language, but he was using phrase that we don't want to wait till the job market tanks. I mean, he used words like tank and crash and, very hyperbolic words that I'm not accustomed to hearing out of Fed officials, basically trying to communicate something that, that he's seeing that softness as well, and that we want to get ahead of it.
Well,
right.
And there's one thing that I think needs to be said, one point on the labor side of the equation. And Powell did reference this earlier this week, when he's talking about how people in the labor market, they have a job, but the unemployed are having a very hard time finding a job, Mark. And so that, like, you start to see layoffs there in an environment where corporations aren't really hiring out there. I don't think that paints a strong labor market environment at all. I don't think that paints a strong labor market environment. I agree with Waller. And again, I think we need to be very clear on something. I'm not suggesting that the Fed needs to embrace a rate cutting cycle to the point where they continually lower. Remember, the Fed interest rate policy is 4.25%. It's in restrictive territory. I'm arguing that the Fed should alleviate the restrictive territory as a way to get in front of weakness we absolutely are seeing economically, and that weakness we are seeing economically is going to offset the inflationary impact on the short term due to tariffs. because there's a lot of open questions on the tariff side of the equation. They're inflationary, but where does that cost actually end up is a debate that we have not seen the final conclusion on. There's some open variables there. What is not an open variable right now is we are seeing signs of weakness or cracks in the United States economy. I'm not projecting a recession. I'm not a radical in that capacity. I see signs of weakness that I feel the Fed needs to get in front so those signs of weakness don't get worse. And all I'm arguing for is to reduce the restrictive territory of that interest rate policy.
Yeah, and one of the reasons I came away with a much more hawkish tilt than I thought, I was actually a little taken back at how, Powell, and I could have pulled a lot of quotes on this, but you know how Powell is like, it's a difficult job forecasting. He throws all that stuff. He had statements like the following: we expect a meaningful amount of inflation to arrive in the coming months. Just outright emphasizing the inflation aspects in his dialogue, like, oh, economy.
Is that strong. The second quote?
We're on 4, bro.
Okay. List them out when you do it so that people can follow. That's all I'm saying. I thought we were on number 2.
Yeah, no, I was bringing them into different points, highlighting the ones that naturally fit in the conversation, but he would outright discuss, right? Like, we expect a meaningful amount of inflation, right? And he had a couple of instances here where he was like, yeah, like we're on, hey, forecasting.
It was very critical, not on people that did not see a bump up in inflation.
And so but outright saying, yeah, our expectations of inflation are higher, but like, even though that the SCP on the labor, showed that they saw the unemployment rate ticking up, Powell de-emphasized that and did emphasize the inflation.
It's amazing to me that he did that.
And this is my biggest takeaway from the Fed.
In the SCP, they bumped up their anticipation on labor to 4.5%, which is not good. That's not good. So they bump up their unemployment target to 4.5%. They lower their GDP target to 1.6 or 1.4?
I think it was 1.4 and then 1.6 in the next year.
So they lowered GDP forecast, increased unemployment, and they had a slight bump up in their inflationary forecast as well. But their inflationary forecast is all kind of front loaded into 26, 25, and some impact into 26. And then it kind of stabilizes in 27. To me, when I'm looking at just the SCP mark, and that's all I'm looking at is the SCP. When you look at the SCP, lower forecast in labor, or increase the forecast in labor, lower forecast in GDP, slight bump up in inflation, I think it shows more weakness on the labor side than it shows the concern.
Absolutely. And this is why I was so taken back during the Powell press conference.
But is it Powell doing that, or is it just the people asking the questions?
No, I think Powell had a message. No, Powell is very skilled. The guy, he's talented. He is extremely, whatever you think of Powell, he is very skilled. This is a very, very well-versed he chooses his words very, very
He's
carefully.
A highly skilled individual, yes.
And he wanted to make the argument, and he wanted to paint the picture that inflation was the bigger concern to him. Right. And I mean, and the de-emphasizing and kind of brushing aside, no, labor markets, well, it's great right now, and economy, so, but inflation, we see meaningful inflation. That's a chosen dialogue.
I just want to be clear on the labor side, though, Mark, because you're right. He does see more risk to the inflationary side, to the labor side. I'm not sure that opinion is shared across everybody at the central bank. And I know that opinion is not shared amongst.
Well, Waller came on CNBC and was like, nope, that's not what I see.
Well, I would like to understand how Powell sits there and says on the forecasting side, I don't know anybody who doesn't project a meaningful bump up in inflation in the short term. Totally understand it. Your other counterparts at the central banks disagree with you, my friend. Your counterparts in Canada, your counterparts in Europe, your counterparts in some Asian central banks, they disagree with what you're seeing. There's some on the central bank that disagree. There's always an inflationary impact. There's always a labor impact. It's which one do you see more concerning? He sees inflation more concerning, Mark, because he was wrong on inflation. It's personal to Powell. But when I'm looking at Powell talking about labor, I'm like, what are you, dude? Talking about 1980?
You think it's just
no, I think he does doesn't understand what's happening in the future with AI. I think he's discounting the overall impact AI is going to have on labor. He doesn't understand
in fact,
it.
He was asked
And
a question on AI, and he like kind of brushed it off, like, oh, like AI may add jobs and may subtract.
He didn't brush it off. He gave a specific answer of basically saying, no, it's going to be net neutral too. Now, you tell me any other person, he was very quick to criticize other people for having a disagreement of opinion with the great Jay Powell. But that same great Jay Powell on labor is saying, no, AI is going to have a net neutral impact on job creation. Seriously? Does anybody forecast that? Does any human being in the world right now forecast that as we go further into AI, it's going to create as many jobs as it's going to take? Does anybody forecast that right now?
Nobody serious. No.
Okay. So he's literally looking at labor saying, no, I'm not too worried about labor, but also part of his argument on labor is AI is not going to have a negative impact on labor.
If a man,
that doesn't make sense, Mark.
It only makes sense if he wanted to deliver a hawkish message to the market that labor.
I think you're putting too much thought into that. I don't think he understands what's happening on the AI side of the equation. That's quite frankly a really dumb argument to have, to say, no, AI is going to create as many jobs in the future as it's going to take away. And I'm going to use part of that analysis as why I'm going to anchor more on inflation than on labor, is because AI is going to have no impact. Like, that makes no sense. You're discounting legitimate data to justify your emotional stance. He doesn't want to be wrong, and he's discounting all data that goes against his argument.
Yeah, I know. And that's the thing. He has an argument. And I think that's the big takeaway here. He has an argument, and he's just trying to make that argument. And this is my fifth and final quote, and I think it sums it up. One, I appreciated this because it was Powell being a little bit snooty. Maybe taking.
I don't mind when Powell gets snooty.
He got some snooty on this, but he doesn't get snooty very often. So it's kind of funny when he does. He's very analytical, but he got a little snooty. Reporter asked, wouldn't it be better, basically as a question you and I would ask, wouldn't it be better to have rates at more of a neutral setting going into this period of high uncertainty? Totally reasonable question, right?
Yeah.
Like totally reasonable question. And Powell answered, and he gets a little bit snooty when he does it. If you just look backward, that would be true. But we have to be forward looking, and this is the thing, and he comes in and he emphasizes inflation again and how solid the economy is. He says, we expect inflation to pick up because the economy is still solid. We can take our time. We can wait a couple of months or however long it takes to evaluate the effects. And so he's like, well, you can't be backward looking. You got to be forward looking. And in our forward looking, once again, he emphasizes inflation is going to pick up, but the economy's solid and can withstand it, right? Like, despite what their SEP said about GDP and unemployment, only emphasizing one side of this dual mandate, just the inflation side.
Yeah. I have the exact same argument. I have the exact same commentary. I'll say the exact same thing. I think anytime you want to emphasize one data point to justify your opinion, you can do that. There's so many data points in the economy. You can pull any random data point to justify your opinion. You got to try to look at it through the lens of neutrality. What's the best path moving forward? And as of right now, here's a problem for the market that's going to continually brew for the marketplace. There is no path moving forward. We don't know what the path is moving forward. And as long as Jay Powell does not have the ability to formulate an opinion on the totality of the economic environment, then we're going to have no path moving forward. It's going to be a debate. And to me, when you're one of the most powerful people in the world, and you run the United States Central Bank, controlling the interest rate associated to the United States Central Bank, you are paid to have an opinion. And the data suggests that he should have an opinion on this, in my opinion. So to me, I think he's late again. I do. I don't know if we should give him the nickname "Too Late Jay Powell," but transitory.
Well,
Jay
someone
Powell
has. Someone of prominence has given him that nickname. And here's it.
I do think he's late here, and I do
Listen,
think he's
if the
misreading the
market,
data.
if we get a soft patch of economic data, market's going to sell off on that. Fed is going to be behind. Market hates it, right? We saw that happen last year. If it happens again and you get a soft economic patch of data at the wrong time where the market's maybe a little, you're going to sell off on that. And you're going to sell off pretty good on that. Market hates it when the Fed's late. It's increasingly looking like the Fed might be late here.
Listen, historically, the United States Central Bank does not lag the other central banks historically. And that's one thing that people in America have to understand, is that historically we see the US central bank move first, and then other
well,
central
you've
banks
talked
lag
about
the
this
United
numerous times,
States.
how you see
We are
synchronized
not
action.
seeing that here. We are seeing divergence happen at the central bank level. You have Japan and the United States going through some degree of hawkish lean, right? Japan's doing that, Mark, because they have unique situations to Japan that is divergent from everywhere else around the world when you're talking about central banks. The US is usually tied to what we see happen out of Europe, Canada, Australia. All these other central banks have a tendency to move when the US central bank moves. What we're seeing is other central banks move without the United States. And that is a little rare. It is a little bit rare. So ultimately, let me ask you a question, because Mark, we live in global economy. I don't care how anybody wants to parse it. We live in a global economy, and the other central banks are looking at very similar economic data to the US is. So let me ask you the question in a different way. Instead of debating labor versus inflation, okay? Instead of having that mandate debate, let me just ask you a different way. Is Europe, Canada, the Norwegian states, England, Australia, are they all wrong and Powell is right?
I think Powell's wrong here. I think they're right. I think you look at the various global economic forecasts, right, that have a pretty good track record, right? They're not perfect. They're all pointing to slower global growth, right? Obviously, all of the central banks, whether it be from tariffs. I mean, the tariff conversation could have a bigger drag on global economic growth than it could on inflation.
I just
right?
go back to
Powell wants to talk about tariffs and inflation. What about tariffs and economic growth?
Right? I just go back to Volcker. Volcker was the greatest central bank president in its history. Would you agree with that?
Yeah, we all tackle trading justice. We agree on that.
Was Volcker scared to act?
No.
Either on the raise or the cut?
Nope.
Okay. He saw the environment, he formed an opinion, and he acted, right? Jay Powell has acted one time in 2 years. One time in 2 years. Are you telling me the economic and the fundamental environments we've been dealing with over that last 2 years has been constantly net neutrality? He's scared to act.
That would be silly.
I think he's scared to act.
No. And if the market gets a sense of this, which if they keep this message, eventually it will, it's not going to be good for the market.
Let me ask you a last question on Powell. He's done next year, correct?
Oh, 100%. Jay Powell will not be the Fed chairman next year.
So he's dead man walking at the central bank right now, correct?
Everyone knows this.
Do you think he's just basically said internally, this is somebody else's problem?
I hope not.
And I don't want to historically have this fall on my plate.
There is some, because I mean, Jay Powell.
I'm not saying that's a high delta, by the way.
There was a lot of people at different points in the last few years, not recently, but it certainly happened during the inflation is transitory, where there was the next Arthur Burns, this is not the next Paul Volcker, this is and of course he hears these things, right? And maybe he's like, legacy. Well, that's not good. That's not good, because that gets you to, if you're behind, if the Fed's behind here. It's not
okay. And again, I'm not suggesting that's what Powell's doing. It creeps up into my head a little bit. Lame duck central bank president in a precarious situation, saying we need a prolonged pause until I'm done, and then somebody else can make the decision. I don't know. I think the data is compelling. I think the data suggests
I think the market would be selling off a lot more at the end of the week if it wasn't like all of the oxygen in the room is being taken by the war right now, right? Will the United States get involved? Will it not?
Mark,
That is taking all this. Like, I
okay,
thought it was
Powell was asked a
terrible.
question regarding inflation. How many months in a row do you need to see a miss on inflation before you move? He did not give a specific answer to me on that question,
Because he had
which
an
means
argument he wanted to make.
whether you have an argument you want to make, it tells me that he doesn't want to make a decision.
Yeah, it wasn't good.
Yeah, let's
It
move on.
wasn't good. And let's go talk. Unless you have something to say on the dollar, let's talk about oil real quick. Obviously,
No, I keep staring at this short-term bearish retracement on the dollar.
Okay, get the trader out of you, get the analyst back, back involved. Obviously, we have headlines on oil, that could change 5 minutes from now, 2 days from now, right? But this chart is going to be, symbolic of, the major story in the market right now, which is, will the United States get involved? Will there be, a supply issue on oil? Even if the United States doesn't get involved, right? The headlines. Do you have any strong takes right now on? I mean, at this time, the latest news we have is that Trump has said that he'll make a decision on United States involvement sometime in the next 2 weeks. That seems like a very wide window on that one. Israel and Iran.
I'm not sure Israel and Iran is going to wait for 2 weeks to make a decision.
They're going to fire missiles. Israel's going to act, right. Like, this is a story that, waiting back on. But, obviously oil, if there is a supply disruption here, right, which can occur on multiple levels, that chart's going higher if there is. Now, analysts are having the fun game, and I know you hate this, of one-upping each other. You know how JP Morgan last week, you had some poignant words to say on 120. Well, they're now trying to one-up. You got analysts. Well, what's going to be 135 now and 130?
Oh, let's play the game. Let's play the one-up game.
Yeah, let's play the
170,
one-up.
Guys. 170.
Yeah,
why doesn't it go to 200? Like, why can't crude oil go to 250 here? Like, why can't it go to 280?
Because and this is the game that happens, because if an analyst comes out there and says, I think oil could go to 95 here, nobody's going to comment on it, right? Because JP Morgan's already saying 120. So if you say 95, nobody's going to quote you, right? So they have to one up. It creates this kind of ridiculous backdrop, but a higher.
I'll just say this: to get to 95, you got to break 76. That's all I'm going to say. Technically here, that's the only thing that interests me on oil. Like, I could care less what JP Morgan says. Can oil get to 120 in a war build out in the Middle East? Yeah, of course it can. Of course it can. Thanks for informing everybody what everybody already knows. And now the banks can jump on that, one-up situation. But before 95 or 100 or 120, my point is, technically you got to navigate 76, because we've seen some real aggressive headlines, Mark. And on those real aggressive headlines, 3 consecutive times, it came right into the previous pivot and couldn't break it. And so, yeah, can it get to 95? Sure. Say a number and I'll say sure. Yeah. Can it get to 130? Yeah. Can it get to 150? Maybe. Can it get to 180? Well, why not? Right. But to do all of that, you got to break 76. And so to me, this conversation is one that anchors around how does the market handle 76 here? And so 76 is a multiple time frame resistance level. I'd like to inform the banks that 76 is not an easy level to break. And above 76, you got the 200-day moving average at 80. And so you got some overhead here, and it's going to be sensitive. It's going to be volatile, and it's going to be tough to project. And so either one, you're looking at day trading strategies on crude oil, quite frankly. Anything outside of day trading strategies on crude oil is kind of difficult right now.
Well, the headlines can change.
Or two, you look at energy. And that's where, quite frankly, at Tackle Trading, that's where our conversations has been. And not just over the last week. We've been talking energy over the last couple weeks here. We've been talking about energy. And I remember doing this, Mark, with the Tackle Trading team, literally 5-6 weeks ago, talking about, okay, now energy. Where's energy over the last year? You have been
all over oil.
Do you remember this moment when I was talking about energy 6 weeks ago, saying, okay, energy is one of the last performing sectors in the last year to date. One of the last performing.
Yeah, I remember because I remember thinking internally, Yeah, Matt's probably right, but I'm just in the mood for semiconductors.
I totally get it. I totally get it. But what's the best performing sector over the last month? Energy. What's the best performing sector over the last week? Energy. And so energy, like, yeah, I do think the conversation always quickly gets into the crude oil, but trading crude oil is kind of difficult in these environments unless you know how to drop position size, drop time frame, and really kind of match the volatility on the time frame, meaning intraday day trading. Outside of that, I think energy's been the clear winner. Energy has been the clear winner. And now the ultimate conversation is, can energy form up a secondary pattern? Because to me, if crude oil goes to 95 or 100, that's fantastic for crude, but what happens to energy stocks in that environment, Mark?
Their price appreciation.
They'll be the number one sector in
the
in the market. And so energy stocks probably see more catch up, in my opinion. And to me, it's been the easier trade. It's been the smoother trade. It's been the less volatile trade. And so while everybody and their dog talks about crude oil and geeks out on whether or not crude oil can get to 95 or 295, what we're talking about at Tackle Trading is energy, and we've been talking about energy for the last month. And so it's been a pretty good situation. I know a lot of Tackle Trading that is on the energy trade right now. And so now it's just a matter of navigating this overextension secondary pattern on energy, in my opinion.
Yeah, and take a look at gold real quick. You know, one of the things that I do not like on gold, and this is a personal thing, I hate it when gold gets involved in geopolitical headlines, right? I think the case for gold is so amazing long term. It just causes disruption to me. That said, any breakout of 3,500 is going to be one that I and numerous other individuals play. It is a breakout situation. The levels are very, very clear, right? You know, and that's one of the nice things about technical analysis is that,
I'm not sure you need to wait.
Oh, okay. Give me a thought.
I'm not sure you need to wait.
I was not prepared for that.
You got a pretty decent technical situation going into a multiple time frame breakout on gold. Gold has been neutral for the last couple months. It's been dialing in this overextension, not on the daily chart, but it's been dialing in this overextension on the weekly chart, quite frankly. It had a parabolic move for weeks and weeks and weeks to kind of start this year. And now you've kind of been dialing in a secondary here on the weekly chart. That weekly chart looks primed and ready a little bit. And now you're coming into a zone on an increase in support against the backdrop of that multiple time frame. Anything above this little cluster here, I do believe you can front run going into that potential breakout. You're also on a little bit of a trend line here. You can kind of see the trend line connecting the lows here. That's a trend line you can anchor against. That trend line, if you kind of go back a little bit, you can see that trend line goes on the pivot points there as well. And so you got this continuation pattern brewing right now on gold, where you can call it an ascending triangle, you can call it a cup and handle. It's a high base on the weekly chart. On the daily, it's a continuation pattern. And in a continuation pattern, the edge is back up into resistance. And the stop loss would go right underneath the low point. So it's one of those cheap risk type situations where you're sitting at a support level going into that potential multiple time frame breakout. And so I kind of like gold here as a cheap risk situation going into a low probable environment that does increase dramatically on the breakout. And so it would be more of a front running partial, trying to get in front of anticipation on the breakout, sitting at that support level. And so, yeah, you are in neutrality, but when you break down neutrality, it's kind of like breaking down net neutrality of the central bank. Not all things are relatively equal. You got to look at the data points, and the data points suggest this support level right here on that 20-period moving average, on the trend line, increased support going into the backdrop of multiple time frame resistance level. I'm not going to hate that. I like gold.
Right, that's a fantastic analysis. That will get me to act before the closing bell today. Stock it or drop it. We're going to do rapid fire segment. You have 30 to 60 seconds to tell me whether you stock it from a position trading perspective.
I like
got
this.
30 to 60 seconds, so you got to get succinct analysis. Position trading only. Stock it or drop it. Stock it. Yep, I'm in. drop it. No, I'm not. We're going to start with Meta.
Team, play with us. Stock it or drop it.
Stock it
Everybody
or
plays
drop
with
it.
us.
My favorite stock headline of the year, period, not a close second, end of the year. This will be my headline when I saw that Meta was offering $100 million bonuses to OpenAI employees. Which I was like, Zuck's committed. Zuck is committed. Zuck
Did you see
has
Sam
done.
Altman said he's not. Unfortunately, a lot of our employees don't want to go.
Yeah, turning down 100 million, that lets you know AI. But also, Meta's
but wait a second. But AI is going to have no impact on the labor market.
No,
okay.
But Meta's
Sam
also
Altman and Meta are competing $100 million bonus checks for no reason whatsoever.
Meta's also been poaching CEOs and founders of other things. It's been crazy. Stock it or drop it, Meta.
Oh, stock it. Don't get me wrong. I'm waiting on a breakout here. I love the continuation pattern on Meta. But no, they announced a week and a half ago they're putting $14 billion in effort to win the race to AGI. I think they're going to make more than $14 billion if they win that race to AGI, quite frankly. So no, it's Meta's a powerhouse. Stock it.
Oracle, Guggenheim raised it to the street high price target, called it its best idea. Fantastic quote saying Oracle is on the precipice of a narrative shift that has been decades of technological innovation in the making. Stock it or drop it, Oracle.
Oracle, they did something pretty special, in my opinion, on their last earnings report. I think a lot of people woke up to Oracle a little bit here, and I am one of those people that woke up to Oracle. I was sleeping on Oracle a little bit. And a lot of times when you think about Oracle, I think about IBM and Microsoft and those types of names, right? And when I mean Microsoft, I mean like Microsoft back in the day, 2010s. Did Oracle on their latest earnings, did it have a Microsoft moment where it just all of a sudden, if you remember, Microsoft was nothing. And then 2010 happened, and all of a sudden they embraced cloud and they became a different company. Oracle, all of a sudden, like I apologize for even thinking IBM, and I shouldn't do that. IBM's been doing fairly decent. So no, I got to say stock it here. Any secondary pattern I think plays on Oracle. I would love a pullback here. Like chasing this type of trend's difficult. I don't love extension environments. I love secondary patterns. And so I would love a pullback here. I wouldn't love a pullback to the 9 because high bases to the 9 usually don't work out, quite frankly. Clean that high base up with a little bit of more secondary analysis, allow that 9 EMA to catch up or come down and get into that 20 period moving average a little bit. But I think any secondary pattern plays on Oracle. I'm going to stock it.
Roku announced this week an exclusive partnership with Amazon that would enable advertisers to reach roughly 80 million US households. Got several upgrades during the course of the week. I saw Roku on my headlines more than I didn't. Haven't talked Roku for a while. Stock it or drop it.
Yeah, we actually had Roku on our list last week on the Traders Report, camped up over the 9 EMA, made it a tough situation. Now you're kind of dialing in a secondary. I don't have an opinion long-term on Roku, but I do like the 85 breakout channel. Any close above 85 is good enough for me. And so technically here, I like it from a tradable situation. Close above 85, let's giddy up and go. Let's see what we can do. So I'm going to say stock it on that side of the equation, but I don't have a long-term opinion here.
AMD made several different. I saw several different analysts commenting on it. Sandler had the most notable of the quotes that I saw, basically saying that it expects AMD's AI business to surge after the third quarter when the China-related charges have passed more of an accounting. Noted increase in conviction amongst investors. AMD, stock it or drop it.
AMD, stock it, Marvel, stock it. Like any of these semiconductors coming from the low point, in my opinion, it deserves a look at. I'm looking at Marvell here. I'll probably do Marvell over AMD from a position style analysis, but again, I don't have a problem with AMD. AMD is looking really, really, really good here. I just like kind of what Marvell's doing at the low point. AMD's weekly chart looks absolutely fantastic as well. You look at the monthly chart, you do got slight overhead right there around 140, but anything on the continuation side of the equation works. You're above a lot of your shorter duration moving averages. I can't say drop it against that. Technically, you're starting to build post reversal into a secondary mid-tier break. Looking pretty decent on AMD's side of the equation. I think you have competition in semiconductors, but at the end of the day, if AMD's your thing, like there's quite a decent semiconductors coming from the low point right now. So I would say stock it. You're gonna have to try a little harder on this. You're giving me clean technical setups. Like
then I'd tell you, I'm bringing the more interesting. Well, here's the next one. I got two more for you. CarMax, KMX, reported earnings today. Reported earnings of 138 per share, revenue of 7.5. Gap up that gave back. Interesting reversal basis coming off of consumer, right? You know, it's what it is with the consumer. A lot of speculation on the health of it. Interesting reversal pattern. Stock it or drop it, Matt.
Good, very good reversal pattern here playing out. You got a little bit of overhead here on the weekly chart. You'd like to get this $70 level dialed in on CarMax post earnings. They had a good EPS beat. I haven't done a deep dive on the earnings yet. I've kind of been lazy on the earnings side of the equation, and when I say lazy, I mean I've really appreciated having not a lot of earnings on the on the market the last couple of weeks. And so I haven't really done any deep dive on the earnings side of the equation. But this looks like a pretty decent beat on the EPS. The overall reversal here playing out is really decent. If anybody's looking at CarMax, I wouldn't have any heartburn here. Good beat on EPS, good reversal playing out. You'd like to get 70 dialed in, but if you're going to give me a clean reversal, I'm not going to say drop it. You're going to give me a breakout on a mid-tier like AMD. I'm not going to say drop it. You're giving me good environments. You can't drop it. And so, no, I'm not looking at CarMax right now, but I wouldn't blame anybody for trying to anchor against that 70 handle.
All right. Last one, because I knew we'd talk about AI and Jay Powell and how he would dismiss it. I saved Nvidia for last, more just okay. So Nvidia and Foxconn are in discussions about deploying humanoid robots at the contract manufacturer's factory in Houston.
Is that going to have an impact on labor?
But listen, there's a reason I tied it in for the last one. So they're going to discussions about deploying humanoid robots to work at the manufacturers in Houston that is set to produce NVIDIA's AI servers. So they're getting ready for the robot fleet. Those won't take any jobs though.
Nothing to worry about, guys.
Nothing to worry about.
Nothing to see here. It's like Leslie Nielsen. Nothing to see here, guys. Nothing to see here. All the robots taking all the jobs, but nothing to see here. Not going to have any impact on labor. Not going to have any impact. Like, come on.
Age of the robot, Battlestar Galactica is here.
The age of automation is what Jensen called it earlier this week. But again, in the age of automation, guys, I think we can all safely say that there is going to be no impact to labor. Everybody's going to have a job in the age of automation. My goodness.
Listen, before the Cylons kill us all, stock it or drop it, NVIDIA.
You ask me this every week on NVIDIA. It's always stock it. Now,
because there's amazing and this is the thing in the last 2 months, there has been insane news on AI progress and stories for the last 2 months. It's been insane, right?
The only thing I'll say on NVIDIA specifically is any close above 150 has to be looked at. You close above 150, that is a fundamental shift for NVIDIA here. And it might take a little bit of time, quite frankly. It might take a little bit of time. But that 150 breakout is a real breakout. And so I wouldn't do anything aggressive in front of that breakout. I wouldn't be looking to add here at 146 in front of 150. 4 points on that is not good enough, quite frankly, to justify the risk. And so I don't think there's anything new. So I'll say drop it for that purpose alone. You got to have respect for 150. It's a double top, triple top. It's a massive level of resistance. And you're only 5 points away from that at this point. And the last few times we've even sniffed that level, we've seen downward pressure in price pretty aggressively. And so I love the company, king, queen, and country on the AI side of the equation. But 5 points into a multiple time frame resistance level is not justifiable. I don't care what the company is.
Listen, a couple quick questions real quick in
Yeah.
Coach's Corner. Going to handle oil and seasonality first. Question is, I've read several places that we're entering a seasonally weak time for oil.
We
Do
are.
you think that that will impact prices? I've seen this thrown out in a lot of charts recently on X and
Oil
different things.
oil
But
seasonality is actually very interesting to understand. Seasonality, positive seasonality starts around February, March, April as the build up and the lead into to the enhanced summer seasons, which are typically low vol and low they don't have good positive seasonality in the summer months, despite the fact that we use more gas, we use more oil, we use more of this in summer seasons than we do in the springtime. You see a front run on seasonality in oil that typically stabilizes in the summer seasons. I think it's important to understand seasonality. I think it's important to understand that it can play a positive or a negative role on your asset classes in that condition, but it's only one data point against a lot of data points. And specifically when we're talking about crude oil right now, crude oil is going to take its cues from the deterioration or the alleviation of the Middle Eastern crisis between Iran and Israel. That's what everything about crude oil pricing is happening right now. Do we see escalation? Do we see alleviation? That's the ultimate question on crude oil. I don't think seasonality is playing a role right now.
final question, the question is, Matt, do you see this as more of a day trading environment than a swing trading environment? I saw you focus on 1 hourly charts and had more of that vibe this week in the Traders Lounge.
Yeah, I do. I don't think it's the same as when we embraced this last time at Tackle Trading. And this question goes to conversations we had at Tackle Trading a lot during the initial saga of the tariff conversation, where the market was down, pretty volatile, pretty uncertain, and we were dealing with increasing volatility, increasing uncertainty, and really kind of a lack of consistency on the technical side of the equation. And as part of volatility playbook at Tackle Trading is something we teach how to navigate times of uncertainty. And when you do have a uncertain condition, whether or not you're seeing it in the data or you're just feeling that yourself, you can kind of look at that through the volatility playbook lens. And with the volatility playbook, Coach Frank has written about it. I've written about it at Tackle before in both the Traders Report and the newsletter. But basically, in general, two things you do more than anything: you cut position size down and you lower your time frame down. And we're talking as traders, not as investors. It's a little bit different for investors, but as traders go, let's say you're a swing trader, like Coach Frank is, like a dedicated core swing trader. That's what you do. You swing trade. Well, in times of volatility, you don't have the consistency of price action over a 3, 4, 5 day stretch to get a consistent move. And so what will happen a lot of times is you'll see 1 to 2 day moves coming back down, 1 to 2 day moves coming back down. And you start to see more volatility on the daily chart. And that's what we are seeing here. We're seeing a little bit more volatility. I would label it shifting volatility if we had a little bit more of a momentum condition, but I wrote about the loss of momentum and trend strength last week. And so, yeah, I do think in general, the environment fits a little bit more of the day trading environment than the swing trading environment. But I would not suggest it at this point. It reminds me of the saga of April and May of earlier this year. I think it's more about just general consolidation and the market having a hard time with all the headwinds that it's struggling with to find a consistent edge right now. As those headwinds get alleviated over the next couple of weeks, which I fully expect them to, I think the market gets back into a little bit more of a trending and a little bit more of a trading environment. So in times of strong trends, breakouts, swing trades play. in times of volatility and uncertainty. Volatility playbook suggests you shorten time frame down. And for the swing trader, when they're shorting time frame down, a lot of that is 30-minute chart. A lot of that is the 60-minute chart. And so, yeah, I do think there's a little bit more consistency on the intraday side of the equation than you are seeing on the daily side of the equation right now. Just looking at the intraday side over the course of this week, how swing trades do in an environment was up, down, up, down, up, down in the market. And so until we firmly break out of this range in the market, given the slowing momentum, the uncertainty that is building in the market, yeah, I do think this is a little bit of a better day trading environment than a swing trading environment. But I wouldn't say that's across the spectrum. Like, if you want to find a good swing trade in the market right now, you can find a good swing trade in the market. It's just that the market is not a beautiful swing trading environment. So I'll agree with that to a certain extent. Yes.
All right. Listen, you called Jay Powell too late in this podcast. If we don't close up shop, then you're going to start calling
3 years ago.
You're going to call me too late, and I'm not going to get put in that nefarious camp. Fed is late here. That is my opinion. Matt, send us out.
Yeah, if you love the podcast, best way to help us out with the podcast is give it a nice little like and share. Tell somebody else about it. No doubt about that. And if you're looking for an amazing community to call home, there is not a better community out there in the financial world than Tackle Trading. Tackle Trading, we have conversations in our Discord channel every single day. We have conversations in our lounges. We have conversations in our coaches show, our traders lounge. But on the weekend, what we do is we put together the Tackle Trading reports, the Tackle Trading newsletter, which will walk you through every aspect of the market condition from technical to fundamental, and the Traders Report, where Coach Greg, Coach Frank do such an amazing job curating the application and education we like to put into our Traders Report. They're the weekend Tackle Trading reports, the Tackle Trading newsletter, the Tackle Trading report. And there is not a better time to join this community than right now, as we are going through our July 4th holiday season. So if you're looking for a community, you want to get some education, application, Tackle Trading is the #1 rated trading educational platform in America for a reason. It's because we put the education in the application in everything we do. And with that said, I hope everybody has a wonderful, wonderful rest of your day, and we'll see you on the other side.
Have a great day, everyone.